Hello, good afternoon. Again, welcome back to the video lecture series on accounting. Today I'm picking one example of consolidated statement of financial position. How we will prepare a consolidated financial position when we are encountering goodwill in the question. So I will pick an example. This example here says P company purchases, I'll make it a little big. P company purchased all of the share capital $40,000, one shares of S company for 60,000 in cash. The statement of financial position of P company and S company prior to the acquisition are as follows. Now, non-current assets, cash at bank, total assets, share capital, that's a parent company, and also the subsidiary company as well given. Now, we will jot down this information in our note. So, P company acquiring S company. P company acquiring X company, and they said they acquire all the shares. That means 100%. And also the number of shares of the S company 40,000, as well as share capital is $40,000. Investment is $60,000. We want to find out some additional piece of information here. So they still don't talk about when the acquisition took place. When the question does not speak about when the acquisition took place, then what you have to do is you have to find out, or you have to assume that the subsidiary has been incorporated on the very same day when this acquisition took place. So here that assumption has to be clearly stated. So acquisition date is equal to incorporation date. Acquisition date is equal to incorporation date. So let's move on further, but they have here no other particular information available. Therefore, now this is the first working, which we call it group structure. First, we have to understand the group structure at the time of the consolidation or at the time of acquisition. The second working will be, we have to calculate goodwill. In calculating goodwill, we have to take fair value of purchase consideration. The fair value of the purchase consideration. The fair value of the purchase consideration here is 60,000. And you also need to understand that the acquisition is 100%. When the acquisition is 100%, so by looking at this, you understand that the NCI is 0. Moreover, the consolidation we have to follow the requirement as per IFRS 10 and IFRS 3 revised. We will be following these two accounting standards in completing the consolidation exercise. Accordingly, we will continue calculating the goodwill. Now we have taken the fair value of the purchase consideration is 60,000, and as a matter of formality, fair value of NCI. We know that from the group structure NCI is 0. So therefore, we take 60,000 here minus fair value of identifiable net assets. Identifiable net assets of the subsidiary at the date of acquisition. At the date of acquisition. So you have to take that. So what type of net assets of the subsidiary we will find at the date of acquisition will be, we need to look into the question. So in the question it is only the share capital. So we have share capital of the subsidiary, that is 40,000. So the difference between what you call the fair value of the purchase consideration and the identifiable net asset of the subsidiary at the date of acquisition is how much? 20,000, and this 20,000 is known as goodwill. This is calculated using IFRS 3 revised. And then we need to find out whether do we have any retained earnings from both parent and subsidiary. The retained earning is not available for both parent and subsidiary, therefore there is no such working required. Now we can prepare the consolidated statement of financial position. Consolidated statement of financial position. We should follow the same format as given in the question. So what is the format given in the question? We have non-current asset, property, plant and equipment, cash at bank, total assets, equity and liability, share capital, total equity and liability. So we will start with that. So we will start with assets. That asset includes non-current assets. One main example of non-current assets in this question is property, plant and equipment. Property, plant and equipment. As I said in the previous video related to consolidation, when we do consolidation of a statement of financial position, unless otherwise we have any adjustments, we just simply need to add the line items. So let's look into the line item here on property, plant and equipment. The property, plant and equipment line item, we have 100 for the parent and 40 for the subsidiary. So we have 140. Then the next line item is the cash at bank, that is part of non-current assets. Now current assets, now we have cash at bank in the parent company. Now parent company cash at bank was 60, but you remember we have paid 60 to purchase or acquire the parent subsidiary. Therefore, the cash at bank will become 60 minus 60, and that is 0. So any other assets available for both the companies? Let's see. We don't have anything else, so therefore we will now take the total of these two. So 140. Now equity. Now here one information we need to actually, here one thing I actually missed out. Here this calculation what we have done here, this need to be bring in. So that is goodwill. Goodwill is 20, and cash under 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 current assets, cash at bank 60 minus 60, which is 0. So now we take the total. If we take the total now, that comes to 160. Now we take the equity plus liabilities. Equity plus liabilities. Their equity, we have the share capital of the parent company only. That is another one rule of thumb. When we prepare the consolidated statement of financial position, we only have to take the share capital of the parent. The share capital of the subsidiary has been netted off against the investment of the parent. So the share capital of the subsidiary is, share capital of the parent is 160, and no other items such as no liabilities or anything else. So we take this total. So this is total equity and liability, and this one total assets. Now this particular discussion concludes a basic example of preparing a consolidated statement of financial position when we are encountering goodwill. And this example would be more suitable for students who study consolidation at a very basic level, mainly for exams like ACCA, CIMA, CA Sri Lanka, or AAT Sri Lanka. For you to have more videos and discussion on this, please visit my YouTube channel and like them, subscribe them, and share to your friends and others who would be benefiting this. And thank you very much on watching this video.